I want to welcome on today's guest, Mish Schneider. Mish is the Director of Trader Education at Market Gauge, coming to us from New Mexico, which I believe is maybe a little bit cooler than what we're experiencing here in the Seattle area. So welcome back to the show, Mish.
Thank you. Actually, last time we spoke, it was so dry here and you said you'd pray for rain. It has not stopped raining since.
So I'm sorry or you're welcome, depending on how you want to look at it, Mish.
Oh, it's a good thing here. We love the rain.
We've exchanged climates here for a little while. I think we both want ours back, probably. But let's get to the charts. Obviously, a lot of narratives this week. We have a ton of earnings, the Fed meeting. Charts are sometimes just and often just the best way of cutting through that noise. Start us in the fixed income markets. What are you seeing here?
Well, if we're taking a look, first of all, at the TLT chart, I believe you have up, that's the long year, the 20 plus long bonds. This would obviously be something that would be greatly affected by higher rates. And certainly we've been in kind of a downtrend till we really got to the lows in June, which corresponded with the lows, of course, of the stock market. So you can see the correlation very clearly between what happens in the market and what happens with the long bonds. And right now, we actually just got to a point of resistance, and this is on the heels of the Fed meeting. Even though we raised by 75 basis points, supposedly priced in, it's kind of the market trying to figure out here, where are we going next? Are we going to stay less hawkish in terms of the monetary policy? Hence, the yields, even though we're trying to get up to a 2.5% rate, is really going to start actually coming down again? Or was today kind of a knee-jerk reaction based on recession numbers, based on people trying to figure out what Powell really meant? And this actually is having more of a mean reversion type trade, which means if it can't get through 120, we can actually see some pain in this market, which would definitely translate to some pain in the overall market, particularly the tech stocks, which are very interest rate sensitive. So that's kind of what we're looking at right here. Also, in the very bottom is the leadership chart. So it just now is matching with the SPY as the benchmark. What you don't want to see is the TLTs outperforming the SPY, because that generally also means a flight to safety, not necessarily a positive sign. But for right now, we're looking pretty good. I think we can see the TLTs even come off a little bit without spooking in the market. Of course, if they crash, that's a whole other story.
Your second chart, Mish, to build on that is looking at high yield bonds, ticker HYG. How does this one relate?
Well, I write a lot about this and actually did an article for Stock Charts probably about a month ago, where this had looked like it had bottomed again in June along with the rest of the market. So everything kind of bottomed at the same time. And now we've had a great run. So why is this significant? Where we just talked about the long bonds, the junk bonds are where bond traders come in and they buy high yield, high debt companies. Companies that are not having a good balance sheet, but yet are going to actually deliver higher yields as a result of that. So they're risky, right? So if people are buying that type of risk, then apparently that means that's good for the overall market environment. So once again, we just got to resistance, kind of like what we just saw with TLTs. And which is kind of an interesting thing right here, because right now the indices look a little bit better than even this junk in the TLTs. So we'll see what happens. But one should watch for this 78 level, 78 level in the HYG. It's actually 96 in the JNK. And keep an eye on that. This is also something that if it outperforms the SPY is not the worst thing, because you want people to feel good in this environment. So again, like you said in the beginning, defy all logic. Look at the charts right now. Nobody is particularly scared.
Now, one chart that has been certainly struggling in 2022 is a chart of gold. We have the GLD here. Is there opportunity for gold here on the upside?
Well, if you believe like I do in the fact that right now we came off tremendously in a lot of commodities, and commodities are very volatile. That's the nature of the beast. And gold went down and tested 1680 in the cash gold, which was a historical low going back several years. If you believe that was the bottom, which it looks like now after some few days of consolidation after that bottom was hit, and now a gap up today that held, then one actually has to say, let's put this all together. If the market also feels that the Fed is not going to be as aggressive as they need to be, given the fact that they are looking at oil prices have come down, and they're maybe even convinced that inflation has peaked, which we are not, then that's the perfect ripe scenario for a stagflation environment where the precious metals can start to wake up. And we certainly saw that in gold today. We saw that in silver today as well. So you want to look at the whole thing, because at one point, do they both go up together, equities and gold or silver? And then all of a sudden the market goes, wait a minute, inflation's not under control. And by the way, gold can go up for geopolitical reasons too. And then the Fed gets more aggressive, and that's where you see the departure, which is, again, the typical stagflation environment.
We only have about 30 seconds left, but I do want to talk about your final chart, Granny Retail. What do you see here?
Well, this has been the lagging sector in all of the modern family. And so Amazon just reported, by the way, as we were talking, and this actually popped up a little bit to 63.75. It had closed weaker than that. But if you really want to see a sustained rally, you've got to have our little granny retail participate here. Otherwise, that would be another great lead indicator that things aren't as roseate as we seem to think right now.
All eyes on earnings continuing with Amazon, Apple also after the close today. So we have a lot more to cover. Mish, it's great to see you. As always, you summarized some really thoughtful comments in just 5 minutes, and we so appreciate you coming on the show today.
Thank you, David.
That's Mish Schneider. Mish is the Director of Trader Education at Market Gauge, coming to us from New Mexico. That last comment is a really interesting one, thinking about how retail needs to be a part of it. And I love that sort of thought. All right, the market, the S&P, the NASDAQ, whatever you consider the market, does one thing. What about all these components? And she mentioned the Modern Family, which Mish's book does such a great job of explaining these key sort of bedrock components of the equity markets and of the financial system, and making sure, seeing what they're all doing to evaluate. By the way, the bottom of Mish's charts featured her plugin, the Market Gauge plugin on our ACP platform. So go to Stock Charts ACP if you want more information about that premium plugin. Let's continue.